What's up everybody, Steve here. If you didn't buy in the last year and a half, 2 years, you missed out on say the 2.5% interest rates, whatever, that's probably long and gone, but rates are still historically low. If you guys are buying real estate, be sure you're well calculated. I think that we are at the top of the market, and let's say that you guys buy something and you guys are not happy and you want to sell it in 2 years. There's no guarantee that the property is going to keep appreciating in value, and especially not the pace that we're at right now. Now, I would definitely go into a home purchase if you're buying it to live in it for the long term, and if you guys have intent to move out of that property, can you turn it into a rental? And if it goes into a rental, can you guys cash flow? So I'd be looking at that if I'm buying a piece of real estate right now. Now, interest rates back when, 2.5%. Now, the average median household purchase price for a house right now is about $350,000. Now, what I did was I did calculations. If you guys were to take a mortgage on a $300,000 mortgage at 2.5%, your principal and interest payment would be $1,185. Now, today's rates, we're talking March 23rd, they just hit on a 30-year fix, 4.72%, significantly higher. But look at what it does to the payment, and let's look at the total. If you guys were to pay it off over the full 30-year term, we're going to talk about how much actual interest you're paying on that loan. So that same loan, $300,000 amortized over 30 years, fixed at 4.72%. We're talking a payment of $1,559 compared to, a year and a half ago would have been basically just under $1,200. Significant increase. But check this out. Interest over a 30-year term on that 2.5% was $126,000. Now, if we look at the 4.72% that was basically hit today, obviously your payment's higher, but look at the actual interest amount. You're talking what? Over $140,000 more in interest, $261,000 that you're paying in interest on that loan. Now, I think we're going to see interest rates go even higher, but let's play it out. Let's say that, they hit 7%. If you look at the early 80s, 81, 82, they were, I think, like 18%. Can you picture that? So rates at 7%, and I'm going to talk about a caveat with this as well. Obviously, your payment's going up, so your payment instead of $1,200 is almost at $2,000 just because the interest rate's that much higher. But look at this. Look at the amount of interest that somebody would have to pay over a 30-year term. $418,000 compared to $126,000. Now, what this is doing, it's reducing people's purchasing power as interest rates go up. But also, another thing to take in consideration is when you have interest rates increasing, you're going to see property values start to come down. So that same property, let's say that same property you're buying for $350 could be in the future, if rates keep going up and they go extremely high, that same property could jump down to $250 in terms of valuation for that property. So it is relative in terms of as interest rates increase, property values will either flatten out or even decrease. And I anticipate, because of this insane growth, artificially everything that's going on in our economy with interest rates and our government buying mortgage-backed securities, $40 billion a month, that a lot of that's all coming to an end, and they're tapering off, and finally they're doing something to combat inflation, which is increasing the Fed rates, which is vital and important. But the market's telling us that it's time for an increase in interest rates. I want to hear what you guys think. Do you guys think that the real estate market is going to continue with this 20% annual growth year over year? Or do you think we're going to start to see things flatten out or even decrease in value and interest rates continue to increase? I want to hear what you guys think. And I appreciate every subscriber on this channel. I have more videos on financial freedom. I think financial freedom is the way to go in terms of just living a more simple life, a better life, a less stress-free life. and ultimately a free life and not bound to the man because of debt. As always, I appreciate every subscriber on this channel. Thanks a lot for being here, and I'll see you guys on the next video. See you.